Welcome to Startup the Science, a podcast by INAM, the Innovation Network for Advanced Materials. INAM brings together companies, researchers, and investors working in the advanced materials space for the purposes of knowledge sharing and collaboration. We do this through our programs, events, and initiatives like the podcast you are listening to. In this podcast, we interview inspirational founders, experts, and investors and get a closer look at what they do. This is your host, Taha Adnan, and let's start up the science. On this episode of Startup the Science, we interview Ferdinand Rudolph Bartels, General Manager at Specs and Chairman of the INAM Board. This episode was hosted by INAM's Managing Director, Oliver Hasse.
Well, a very warm welcome to Ferdinand Rudolph Bartels.
Hello, nice to be here.
Who's joining us for the next podcast of Startup the Science, the INAM podcast that has been ongoing for 3 seasons now. We're absolutely pleased to have Ferdinand here, not today as the chairman of the board of INAM, which he has been since 2017, but in his role as managing director, CEO of a high-tech enterprise. And it is exactly this what we want to talk about. But before we dive into the subject, Ferdinand, you know much better your life than I do. Perhaps tell us a bit about your history and what brought you not only to INAM, but to the companies that you're leading at the moment.
Well, yeah, let's start at the end. I'm a material scientist from education, which brought me to INAM. When I came to Berlin almost 8 years ago now, I wanted to do something besides my work, which is more in science and physics, and the INAM network provided me an opportunity to work with startups in the field of advanced materials, and I enjoyed that a lot, and I'm still enjoying that a lot. But from a business perspective, I'm actually educated or made most of my experience working with larger corporates in Europe, companies like Degussa, which is not Degussa anymore, Evonik today, many years with Heraeus, another relatively sizable company here where I made my industrial experience, mostly in electronic materials. So I have some experience, or quite some experience in Asian expansion, where most of the electronic industry is nowadays. And that was in the beginning of the 90s. There was a big trend, first to Southeast Asia, then up to China, moving north. And so I did that for about 15, 16 years of my professional life before I moved on to scientific equipment businesses, which I'm responsible for now. So that's my background. I'm a born German, North German, living in Austria. So I enjoy the mountains, come here to Berlin to do my work, but I'm enjoying to come home to my new home place in Austria.
Okay, that sounds fantastic. Now, what then made you leave the safe haven of corporate life? Safe, that's a different topic, and go into the, let's say, rather more challenging life of a small to medium-sized scientific equipment, let's call it deep tech, hardware deep tech enterprise, in a situation where this enterprise might not have been in the best of its shape?
Well, I guess that's multiple of reasons, and I could create some going backwards, but I think the most one was that I was looking for an opportunity to handle the business in all its aspects. Even if you are a division manager or a business unit manager of something in a larger corporate, a lot of functions are being not under your control. You don't have to deal with treasury, you don't have to deal with banks, you typically don't deal with any tax issues and so on, because this is all centralized for good reasons. If you work in a company, so Specs, the company I'm responsible for at the moment, that's about 150 people here in Berlin and about 180 worldwide. Here on the very first day, you call the banks. And that's something which is it teaches you a lesson. It teaches you that running a business is more than just having a production and products and customers. It has to do with financing. It has to do with a lot of contractual work, not only with the banks, but to a certain extent, of course, also with the customers. And the completeness of that business element, that was attractive to me. And I wanted to prove myself that I can deal with these situations, even if they are more complex than what you would expect that you are being trained in as a material scientist, for example. Even if you have industry experience dealing with taxes, dealing with legal, dealing with banks, well, it's a new field, and enjoyed that a lot, and I'm still doing.
Yeah. I guess the English term general manager really captures as well, because you are responsible for everything in general, as opposed to, let's say, line manager, which is a corporate term where, in fact, you have to look at just at a certain number of things. Now, when you came to the company, what situation did you find it in, and where did it stand, both from the historical perspective as with a view to where it was at that point in time?
Well, when I came to Specs, which, as I said, which is a classical medium-sized company founded in 1983 by a bunch of physics graduates, thinking that they were really, really smart, and probably they were really, really smart. And they little by little built that business. For the next 15 years, it was still quite small. It underwent quite some critical times, found a shareholder that actually provided them enough liquidity. So they made it into the 2000s, 2004, 2005, and then they were rapidly growing because there was a change in industry. The universities were in need of more fully equipped systems, not only just components. So they began to sell large systems. And this growth period that happened over almost 10 years killed the company almost, because the liquidity wasn't there. So the growth wasn't, and they never got to the point to finance the growth rates by the profits that they generated or the liquidity that they generated. So they basically always lived on shareholder credits or bank credits to finance the next steps of growth. And you can do that for a certain period of time, and then suddenly it stops. Banks getting nervous, shareholders are getting nervous, and I'm asking when I'm going to get my money back. And you cannot continuously tell them the growth story forever. And that was the point when I came. So the company had a relatively stable business. So when we talk about turnaround here, we are not talking about companies which are in bankruptcy or close to bankruptcy. We're talking about businesses that have difficulties, maybe have making losses. So classical name of a turnaround is you turn something from a negative to a positive. Well, to the positive to the negative is also a turnaround. Probably you don't get much credit for it.
You want.
And we were in such a situation. So there was an existing business, and the customer's base was good, but there wasn't the profitability at a level which the shareholder was happy about. And that's where we started. That's where we started to turn things around and improve the liquidity, improve the profitability of the company, not focusing too much on growth, focusing on stabilizing the situation before we then went back into R&D programs to foster further growth, step by step. And now we are growing things since 3-4 years now, quite steadily, and the company is quite profitable. In the meantime, it has been sold to the RAG Foundation, which provides a very, very stable and supportive shareholder structure for the company, which is also extremely positive.
Yeah, absolutely.
So in a way, it was a classical turnaround situation, because we turned it from making losses most of the time, having liquidity issues most of the time, into something where that is behind us, and I hope for the foreseeable future behind us. You can't predict the future, but I think the company is currently very stable.
Yeah, and I think the situation resonates very well with the startups that we usually take care of. They are not in a, they're facing similar situations at a certain point in their history or in their trajectory, where they have to decide how to grow and where they might not be able to raise more money at a particular point in time, and they need to get into profitability with other means. So extremely relevant to the let's say part of the target audience of our podcast. Now, when you started at Specs, were you fully aware of the situation, or was it like you have not been fully informed of? I'm not talking about details, but on a general level.
I wouldn't be able to share any details, but when you get into a new situation, regardless whether it's a small or a bigger company, when you start with a new company, you can get quite some information. I mean, the numbers don't lie. They're in front of you. You can look at the annual reports. They don't lie to you. They tell you what's there in terms of numbers, but it doesn't tell you how happy or unhappy customers are. It doesn't tell you how is the team functioning or not functioning. Is the product portfolio healthy in principle? And there are some other things that are causing the issues. Is there a team that actually is working together? Do the people in the company even understand that there's a problem? That's a big portion of turnaround work, or generally business improvements, is the question. Do the people actually understand that there is an improvement necessary or even possible? Or there's a general belief that they have done already the best they can and there's just no way of improving things anymore? Or even to the point which you have very often in startups that grow. Just on Friday, I've been visiting a company which is undergoing a tremendous growth from being a very small startup, suddenly going into double digits in sale in just 18 months. And you get people there in the organization that are, because there's a lot of stress, they wish the good old times to be back. Mm-hmm. It's the good old times where things tend to be slower, at least feels like a bit slower. And this type of atmosphere and this type of culture, you cannot predict. You can visit the company 2-3 times, which as a new general manager, you seldom do before you start. But in principle, you could do that, but you won't get that. There's still an element of surprise when you get in.
Yeah. I can imagine. Yeah, I mean, and we know that even annual reports might not even be so true. I'm not saying that this in this particular case has been the case, but
I would never say they're not true. It's just they could also be misleading. Yes,
they could lead you to wrong assumptions. Let's say. Now, did you start alone, or did you come in with a team of managers? Or
no, I came in alone, but I brought along with me some outside help. People that I worked with in various other jobs, people that have an understanding about how to establish a project management, how to establish some cultural changes in company. Yeah. So I used them, if I might say that word, for it. And they're good friends of mine, so they helped me in occasions, here a few months, there a few months to get things going. Yeah. But in this particular case, the situation was very favorable because there was a team there which didn't need much bonding. The team was established relatively quickly, and it worked from day 1 or day 2 or day 5, whatever it was at the end. I don't remember. And to this day, the team is just excellent in performance and excellent in motivation and drives the business forward. That's generally is anyway one of the key lessons or key messages that I would like to get across is if you are with your business in a critical situation, from whatever nature it is, the management team, the few people that you can trust or the few people that you can build trust in, depending on whether you are new or not, is a key element. So you go in there alone, you can be as smart as you want, you're not going to get anything done. If you walk in and it's not a 5-people company, of course, you can work with everybody, but if it's a little bigger organization and maybe some people who are not fully committed or not fully working at the company, just partially working there, still some in the universities, so what do I know? It's critically important to identify in the very early days and weeks who are the people that I can rely on? What's the management team, the core team that I can create here, so that this business can be turned around? More important than talking to customers, more important than talking to the banks, more important than talking to looking at the outstanding payments and warehouse values and whatever you might want to look into first. I would first to look into the eyes of the people, the ones that you're going to rely on anyway. If you can win them, and if you can form a team, the chances of being successful in the turnaround situation is significantly higher than if you have to fight the management team. Most likely you won't succeed then anyway.
Yeah, I think that is a very, very interesting lesson. And of course, you will have to be in a situation where you have time to do this when you're facing insolvency or bankruptcy issues. And every day counts. You obviously just have to, go through and do whatever is necessary.
It's a crisis situation, definitely. And again, as I mentioned, it's not an insolvency or bankruptcy immediate threat, because there is still a shareholder that's committed to the business, and the shareholder is hiring you or is asking you. Now, if you're a founder of a startup and might have a shareholder also, he's asking you that please change something because I'm not happy with the results. That's a good and a bad message. So the bad message, of course, is the results are disappointing, but most likely you know that yourself. The good message is that the shareholder gives you a sign of trust. He tells you that I believe in the business, I believe in the company, I believe in you also, and I want you to turn things around and improve the situation. And that should give you at least enough time to look around and have spending the few hours per day, the few days in a month that you devote to your management team, trying to get them on board. Once you've done that, things will accelerate automatically. So the amount of time you win once you have established such a team is worth the few days you're going to lose initially. And as I mentioned earlier, it's no way in a larger organization you cannot get everybody on board. It's a communication. It's impossible. You can't. So you have to focus on your team.
And I guess it's also that team then that gives you or helps you get the information that is not in the annual reports and that are not visible to you.
Yes. And let's stay with the people for a second now. Don't choose the ones that are generally always they are the ones that are coming to you and telling you how great they are, how happy they are that you are around. And now you need to look for the ones that are generally motivated but very critical and open-minded to the situation. That you have the feeling they can handle even the negative news. They can handle it and they stay motivated. If you go for the ones which are only thinking that if they agree to every argument that you bring on the table, you don't need that. That's not going to help you, because if you go in there, you're going to make mistakes. If anybody has ever been in a critical situation in a company and tells me that he or she didn't make any mistakes, generally lying. I mean, you make a lot of mistakes because it's a crisis situation. And the best you can hope for is that you make a few more good decisions than bad decisions. And if you have people around you that have a long history with the company and have a deep knowledge about your products, the product that the company is making, and they can help you to avoid one or two bad decisions that can already turn the tide towards the positive. People that only agree with you won't help you. They won't give you the criticisms. They're not going to tell you that idea isn't going to work. They're going to tell you yes, and then you find out later. So that's something still on the people side that's critical.
Were the original founders still involved?
No, not in this case. The original founder was just a financial investor who, I was typically joking, was an angel investor who forgot to get out. So he stayed in there for 30 years. and normally angel investors move out after some years. I mean, he went in the company when it was less than 1 million in revenue, and he was still there when it was more than 30 million revenue. So he stayed there for a really, really long time. But he was never active in the business. He was not in the field of physics, not in the field of science. Actually, he was in the field of pharmaceutical products. So
I think in terms of strategy, what to do when you enter in such a situation in a business, we've touched on people. Before we move on, let's dwell a bit upon the products and the markets that the company is actually at the moment targeting or offering, and whether that has been different in the past. And that leads us then obviously to what strategies have been you employed to move the product and top line into the right direction.
I mean, let's look a little bit on what could be the reasons for businesses not performing very well. Very obvious reason is you have the wrong product. So if it's really the wrong product, that means if you have come up with something which is not living up to the expectations because it's just not good enough. Because in the years you developed it, somebody else came up with something which is much, much better. And there's little or nothing you can do about it. I think it's seldom the case, but let's assume for a moment it is. You have a product which is substandard to whatever is currently standard on the market. That's a runaway situation. That's not a turnaround situation. That is something which I think nobody can do a miracle in that. We are in a competitive field. And if it's technically or scientifically there is something better in the field and you cannot match that, it's a turnaround. It's not a turnaround situation. In most cases, yes, I would say almost in all cases that I've seen, that's not the case. Typically, products invented, they meet the requirements, they meet the standards of what customers are looking for. Very typically, it's something else that's missing. It's not the product as such. Sometimes it's that you don't add enough value to the product. So you have to upscale a little bit or maybe a lot in order to make the invention that you came up with into something that really the market sees the value in. So you need to, that's a lot of investment, and that's a change situation. Very often happens, very, very often happens. Sometimes you have to look downstream because some of the ingredients you are using to make your product, some of these technologies you are using to make your products are so special or hard to come by that you need to make some changes here so that your potential profits are not being eaten up by your suppliers. So it happens more than once. It's not too rare. So, and then that's probably half of it, I would say. Probably half of it. The biggest portion is lack of structures and the lack of self-awareness of what you're good at and what you're not so good at. Many young companies don't have internal structures that allow them to be successful. So the failure starts not at the beginning where the product is being invented. It's not even starting with the first customers. It starts with the 10th, 15th customer or the 10th or 15th sale. Suddenly you enter the valley of death out there. Customers are buying your product. You're not able to service the customer properly. You're not able to provide them with the same quality product for the second, third, and fourth and fifth buy. So you have variations in your product quality, or you have logistic issues which you just totally overlooked, and things like that. So the processes and the structures in your company don't work, and these are actually the easiest cases. Technically, they are the easiest cases because then, and they're also the cheapest. When you need to upstream your product, you probably have to spend a lot of money on equipment. When you have to work on changing something in your raw material flow, you probably have to spend a lot of money on development. If you only have to change the structures of your company, it doesn't need any of that. You can mostly do it yourself. So that is the easiest situation. At the end, of course, it depends on that you do a proper analysis of the situation and come up with the right conclusions on where to fix things, of course.
And just to recap, we're talking about, when we say products, we're talking high precision, high-tech measurement instruments.
That we are doing, yes.
That are mostly, as I understand, purchased by research institutes, universities.
Yeah, about 80% is purchased by research institutes, 20% by companies, larger companies that are doing research. We do sub-nano surface analysis, and we measure the compositions on the surface, but we also measure the electronic states on the surface. So there is stuff which is important in superconductivity, in solar cells, in battery research, pharmaceutical research, and so on. So it's something that just being a poor material scientist, not everything of it I understand 100%, not always. But as I typically say, sometimes I have a good idea what the technology could be used for. So that helps. Yeah, but it's complicated equipment. Our systems have a price tag of something between 500,000 and 1.5 million euros. So you don't just buy it just like that quickly. Typically, there are long sales processes involved, and that also means if you want to improve a situation, you have to be very patient. Development cycles are long. So when you make a right decision, a good decision, you have to be prepared to wait for 3 to 5 years to prove it, that this was a good and a positive and a profitable decision. That's the way it is. I know in many other activities, this is faster. If you are directly in materials, if you're in software or anything, that's tends to be much faster. But then in our business, once you made the right decision, it's also going to last longer. So it has pluses and minuses like in everything.
But I could imagine, I mean, knowing a bit the sales cycles in the public sector in general, but also in the university space in particular, that is certainly something which requires a very, let's say, sophisticated working capital management, right? Because probably once you get the order, the sales order, then you customize the product, or is it
mostly
off the shelf?
No, it's not off the shelf. Mostly it's customized. Yeah. It's certain modules which are standardized, but the way you put the modules together, then it's yes, like in automotive sales. If you go in, you change a wheel, you change a tire, change a color, you change your engine, and so on. So there are millions of variations, and of course, in our case, this is the same. So a sales process takes up to 3 years. From a customer order to the final acceptance, typically 1 year to 18 months. So it's a long time that goes. Big issues, for example, is currency exchange. So we see it right now at the moment with euro and dollar getting parity, which is good for us if we sell in the euro area, producing in Europe. That works for us, but the reverse situation is really, really bad for us. So that's something that can hit in your profits. It can hit in your liquidity quite a bit. We're having, as everybody knows, we're having a lot of supply chain issues, not only in Europe, everywhere we have it. So now you have here a machine that is has a value of €1 million or so, and you have one single part missing. The supplier is not delivering it, and then you sit on €999,000 and waiting to be delivered, and you have to finance that. So the contracts with the customers, the contracts with the banks are really important. Like all the heavy equipment builders, special equipment builders, liquidity management is key issues in this field. If you don't do that well, you can make as much profits as you want, you're going to be in trouble.
So is there anything that you brought in new in liquidity management, or was that a particular focus when you came in?
Yeah, I mean, I would tend to say that we changed pretty much everything. that comes to my mind is, I mean, when you build equipment, one of the fundamental decisions you have to make is, do you want to build to order or do you want to build to stock? And it's a difficult decision, but it's also an extremely important decision that you don't make mistakes here. If you build on stock, your delivery time is going to go down, but your financing needs going to go up. And your flexibility goes down. Because what you have on stock might not be exactly what the customer wants. And if you customize most of your products, by Murphy's Law, you're going to end up with something you're missing.
Yeah.
So at the same time, if you order everything, if you buy everything on order or build everything on order, and through the entire chain of manufacturing, which is, as I mentioned, very, very long, your manufacturing time becomes too long for the customer to accept. So he might still accept 12 months, but if you tell him it's going to be 24 months, he might say, no, I go to the competition where it gives me in 12 months. And here they have to make a good decision on some products, some elements of the systems, which tend to be more standardized, to build them on stock and then to build the system on order. Mm-hmm. And if you manage this carefully, and if you then go to your suppliers and you sign good contracts with them, or you negotiate good contracts with them, at the end of the day, you can reduce the waste, which not so much devaluation, so not overage stock, and you can reduce the material quota. And the material quota for equipment manufacturers is, well, the holy grail of making money. You get the material quota down, you make money. The material quota goes up, you have something to explain to your shareholder. That's the way it is. So we changed that process a lot. We implemented an ERP system to have more transparency on it. We implemented a project management system, including at the beginning we did it in paperwork, where you can implement the project. I seeing a lot of small companies, up to 10 people, that come along with the most sophisticated project software, ticket software, whatever it is, and I say, well, 10 people, how many projects could it be? So why do you spend your time and effort on dealing with such a system when you see all your colleagues every day anyway? You can do this on an Excel sheet or on a piece of paper. So we implemented a project management system without software for the first 12 months before we actually implemented the software, which is now deeply enrooted in the company, and it's very, very helpful. Mm-hmm. I'm not against software, not at all. But sometimes I'm thinking that the purpose on why you want to do project management is more important, or how you want to do project management is more important than just the technical tools you are using for it. The technical tools it's the same when you implement an ERP system. If anyone in the audience has an experience in implementing ERP systems, I'm sure they can relate to this comment now. First, you have to get your processes in order. And then you can implement an ERP system. If you do it the other way around, the outcome is not going to be good. It can be really, really detrimental, mm-hmm. but definitely it's not going to be good. And a little bit, this is the same with project management. First, you establish the principles on how you want to work, what kind of projects you want to run, agile or not, and dedicated team members, allocated teams with change of disciplinary reporting lines and so on. And once you have defined that, once you have defined the principles, how you want to work in your company, then you can look out for who's going to supply me, gives me the best software to my needs. And that's it. It's in software as a means to an end, at least for this type of software.
I think in many respects it is, and it's oftentimes these days not viewed as that. Yes. It's viewed as the answer to every question.
But a general point made is transparency of the numbers, transparency of the KPIs, which of course you have to know which ones you are really interested in. That's a cornerstone of managing a business, and it's of course a cornerstone once you want to improve a business or even to have a turnaround situation. If you don't know your KPIs, And don't say now this is only working for SMEs with 30 million euros in sales. It works even for the smallest startup. If you don't know your profit margin, your material costs of your product, if you don't know what the market price is, if you don't know the volumes that are being used out there, well, don't be surprised that you will be surprised out there. And you don't want to be surprised out there, because most of these surprises tend to be negative. Or if you sell the product too low, it's also a surprise that you could sold it for a higher price. Now, these KPIs and transparency of the KPIs is a critical issue. And if you don't have that in your small company, or if you don't have that in your bigger companies, you have to implement it. You have to implement it as fast as you can. So if you don't have your KPIs, whether it's being liquidity or on-time delivery or material cost quota or whatever it is, if you don't have visibility over it, you're not going to get it. Never. And once you have them, then you have to manage them. And well, this is in the crisis mode. You have to manage them more tightly than in a more positive environment where you can relax a little bit. So it's there's nothing wrong as a general manager to sign off bills every day, to keep control over what's happening in the company, keep control over where the money goes. There's no harm, even if it's just €100 bill. I can still sign it. It doesn't hurt me. The second thing, critically important, in my view, is establish a project management. Just don't argue about it. Just look at your business and establish a project management that fits to your need, but establish one. And the project management means that you're not working in a continuous phase where you just keep on working and you just wait for the result and wait for the result and wait for the result. No, it's good also for, let's say, for the mental health of the employees and yourself also, that you give the most important things that you do, you give them in a beginning and an end. And you say, I'm doing this for a purpose. And I can describe the purpose, why I'm doing this, why I'm changing my product, why I'm implementing an RP system, everything. This all has a purpose, and I can describe the purpose. And I can not only describe the purpose technically, I can describe it financially. I know many, when we talk in our various ATMACOMs and wherever we are, bringing everything down to numbers, bringing everything down to financials is not something people enjoy too much, but it is critically important. So don't do anything if you work with a customer, if the customer, even if it's a big name, and comes to you and saying, please give me your product for free and I'm doing the greatest R&D with you and eventually I'm going to buy it later. Look at the financials and then decide for yourself how much money you want to spend on that opportunity. And give yourself a deadline and say, once we reach that time or once we reach that money spent, I'm going to stop. And be clear about it. Also be clear to the customer about it. And say, I'm going to run this to this point, but then I looked at it, it's never going to pay back. I'd rather stop. Don't throw bad money after good money. Very, very, very important. And this goes with everything. So I'm a big fan of project management, and I'm a big fan of having this all the way in every function that a company has. Because I think that is, it makes working easier. It is easier to understand when you have a feeling that I'm not working on something for the next 5 years and don't see an end. When I'm saying I'm having something here, I'm going to work now for 6 months and then I will look at the result. And when they are positive, I'm happy. And if they're not positive, I make changes and hopefully I can turn things around even in the project. Yeah. So that's the way I see that.
I think that makes a lot of sense, because at the end of the day, it is liquidity and the cash in that keeps the business alive.
Yes.
And obviously, you have to also control that on every level, or at least be aware of and be able to steer on every level where money is being spent.
Yeah.
Before we wrap up, perhaps we come back to the people level again. You were stressing already that having a core management team, having good rapport with a core management team is crucial. But then when you bring all the changes to a company that you've explained, you also have to take with you, not only the management team, but everybody else. Not everybody else has to be a super loyal follower, but they have to be engaged enough and believe in the vision that you bring with you for the company, that they do their job at least as good as possible, if not as good as they could possibly do.
I try to give a simple answer on that. I think that as a general manager of any company, shareholder or general manager of any company, you have to be profitable by law. I mean, simple. You have to be profitable. Your shareholder requires it from you. So this is kind of the absolute rule. If you don't make money, then you have no purpose in business. You don't have. The second important thing for me as a general manager always is the number of jobs created. To me, this is critical, absolutely critical. When I go somewhere, when I look at the situation here in Berlin, the lowest point was 110 or so, and now it's 150. So that means there are 40 more people working there, and that's, to me, it's a sign of success. And whenever the turnaround, also in my past, has been successful, it never was successful by now we have half the size and we call that a success. Now, at the end of the day, and it might take years, but at the end of the day, there are more people working than before. And the motivating effect, there's nothing more. It's a disaster for the company culture if you have layoffs. It's a disaster. It's something where a company recovers from. Of course, it does. It takes time to recover. But the price is high. And if a company is hiring, if a company is growing, it creates a positive momentum. Everybody wants to work in a company that is growing, where new employees are coming, and hopefully they're staying for a long time. And then the only thing, and I'm saying it's not easy, the only thing you have to do is then to create a work environment where people maybe not love to come to work every day. I think that's too much people ask for, and it wouldn't even be true for me. I have my Mondays too. But where the general atmosphere at work, the general environment at work is so positively that this is not felt as harmful to go to the company, that you most of the time enjoy to go to work every morning, and that the work environment is generally positive. That's more important than having each and every aspect of your strategy or your financials distributed and communicated to every people and every group in the company. Not everyone is interested in every detail of a strategy. Just imagine in our case where it's very technical, very physics related, and not everybody has a diploma in quantum physics. And some of it is difficult to understand without a physics diploma, at least. So that's not so. But if you can go in front of your team in your company and you can say, look, we did good, we did well. We can pay a bonus, which is always great, but we did well. We are more people than last year. To me, it means something. And I have the feeling it means something to most people in our company and every company I work for so far. That's to me is a critical thing.
Yeah, I can imagine very well that people love to be part of a bigger thing that's developing positively.
And one more point is, if you are working in, let's say, in Germany and Austria and Switzerland and yes, anywhere in Europe, it doesn't really matter. And you manage that your company is growing. It's growing in size and profitability in number of employees. The people don't have an issue then if you open a subsidiary in the United States or China or Japan or wherever it does, and it further fosters the strength of the company. The situation only turns into something negative if you tell them we're going to be half the people here in 2 years, and it's going to be 501 in Japan or Philippines or wherever. So that's also an element. Stay some focus to the headquarters is my my message here.
No,
what
true.
I think is strong. But let me make one comment to me very important in turnaround situations, particularly in young companies. Typically, in young companies, the shareholder is a general manager. Very typical. And turnaround situations are mentally difficult to cope with because, first of all, you have to tell yourself that you made a mistake. Don't underestimate when I came, most of my jobs, I said I made a lot of mistakes, but initially I came as a new guy. I came in as a general manager, as a new guy who knew something about the business, but never worked there. And of course, I don't have a history of making mistakes in the company. That makes my life a little easier. Mm-hmm. If you're having to make some severe changes in your company, but you're the founder of the company, the first one you have to talk to is to yourself. Because most likely, a big number of the mistakes you did yourself. And one of the messages I want to bring across is don't have any fear. Don't panic, but be honest to yourself. It doesn't help if you look for scapegoats in the rest of your team if the fundamental issues are starting with yourself. If you don't analyze your own mistakes, if you don't learn from your mistakes, if you don't correct the mistakes that you made, well, it's a bad start for a turnaround situation. It's also a bad start because how will you believe that anybody else is going to follow you? And the second point is once you have analyzed your mistakes, and I know in Atmacom we constantly teach the people about team and diversity, different talents in the team. If you have assessed your mistakes and if you have assessed the chances that you, with your personality, are able to make the changes to yourself to turn this business into something successful, then most likely it will not. A consequence might be that you are not the one that is a perfect general manager for a company. Maybe your friend is. Maybe a colleague in your team is the best general manager and you happen to be the best R&D person. Or whatever it is. The most critical decisions to make are the ones that affect you directly. It's easier to make decisions for other people. But the ones that affect you directly are the most difficult to make, but they are in these circumstances the most important ones. You assess your situation, and if at the beginning of this conversation I talked about the team, now you picture yourself in that team. And you picture yourself with your strengths and your weaknesses. And then you ask yourself, in my current position, in my current role, am I the strongest player in that team, in that function? Or am I part of the problem and not part of the solution? People that moving to the right place in the company at the right time, they deserve the credit for not being in the way of the company being successful. So that's an element. So when you go into such a situation, is no fear, no panic. Every startup, every young company goes at least once through this times. I've hardly seen anyone that has never been in such a situation. And it's going to happen most likely with every company through the lifespan of a company numerous times to see some difficulties on it. That shouldn't worry anybody out there. That's normal, I would say. So no fear, no panic, but do an honest assessment of your own talents, because that means the most to the success of your company. And I believe that all of you started not because of abundance of egos, because you wanted your technology, your innovation to succeed in the marketplace. So you have to do whatever it takes, even if it means you have to take some consequences on yourself, change your behavior, go back to school, learn something which you haven't learned before, or find a way to rearrange your team so that it's functioning better. One way of doing it. Many ways of doing it. You just have to pick the right one. And by the way, this also will tremendously please, the shareholders, if you have angel investors or generally any kind of investor group that is committed to your company and committed to the business that you are in, if you come to them and say, I did an honest assessment of the situation, and here I'm making these changes, and I know they're going to be severe changes. I'm really changing roles, including my own. And I'm changing whatever location of the company, and I'm changing the product. So I'm making severe changes on it. You win the trust of the shareholders much more than if you tell them, well, it's going to be fine. We're just going to work harder. The element of doubt is probably at your shareholder already. And if you just give them the message, we're going to try harder, and it's not very likely that the trust of your shareholder is going to grow. But if you show the shareholder that you are willing to do everything necessary to make this a success, you might even get your shareholder to help you on your liquidity issues, which you most likely have in these situations.
Yeah. And a shareholder which has liquidity is obviously a very helpful hand in such situations.
Yes, I mean, most of the shareholders I've seen in over the last years or decades by now, shareholders that have already invested in a company and going through difficult times together with the company, they are looking for reasons to invest. They don't look for reasons not to invest. It's also for them difficult is to step out and walk away. It's financially not really nice, even if they have deep pockets, but it's also emotionally difficult. Don't underestimate. I know very, very often investors are being seen as some neutral bodies with deep pockets. Well, I haven't met one of them. Most investors that I have met, or all the investors that I have met, are quite committed to the areas they are invested in. That's the reason why many of them only investing in certain industries, because they really like it. They enjoy to be part of that industry. So when they see one of their child, of their investment babies not doing very well, they're looking for a cure. And if they see a promising cure, they rather invest deeper than moving out too early. And well, since most investors have experience and not 20 years old, exceptions confirm the rule, they know that companies go through cycles. They know it. They don't panic. A good investor doesn't panic.
I think that is a very valid statement. Good investors don't panic. You, as the general manager, shouldn't be panicking, because business goes through cycles, and it's the question of how they're managed at the bottom of the cycle and before, in terms of how much do they prepare, how much do they use the good times to prepare for the bad times, which are foreseeably coming,
yes,
which makes them survive.
Yeah.
Well, Ferdinand, I think we're coming to a close of our conversation. Thank you so much for all these insights that you shared with us. I hope the audience enjoyed the conversation as well. And you're most welcome to tune in to our next podcast, which will be out in a month's time. Thank you very much, everybody, and take care.
Thanks, everybody.